Hello everyone, this is Kunal Shah, Head of Commodity Research from Nirmal Bang, and we are going to discuss about the outlook of commodities during the year 2024. And last year was the year where we've seen a lot of volatility in all the commodity complex, where oil moved up from $60 to $110 to almost back to 65, from 65 to again 95, 95 to again 70. This is the kind of volatility what we saw. Gold, it moved up from it moved down from $2,100 to almost $1,800 again to again $2,100. From there again $1,800, and now again submit trading at $2,100. So huge volatility what we have seen last year in all the complexes. Natural gas, even for that matter, prices moved up from 200 rupees to 310 rupees, 310 rupees to again 200 rupees. This is the kind of volatility what we saw. 2024, what is the theme? So before we start giving you outlook on commodities, we are going to focus on theme. The theme for the year 2024 is, in the first half, in the first quarter, or perhaps during the second quarter, the lag effect of the quantitative tightening is going to be felt. So what has happened is that the US balance sheet have shrunk from $9 trillion to almost $7.7 trillion, and US interest rates have soared from 0.25% to almost 5.5%. But we have not seen any impact post that. So markets have completely shrugged off the ongoing tightening, because the liquidity was so much in the system. We didn't feel the heat. The inflation has started to move down in early 2023, and by the end of the year, inflation moved down from 9% to almost 3% in US, and that was the trend in the UK, that was the trend in the Europe, and even in developing countries like India. The key reason why the markets are not the broader markets have not reacted towards quantitative tightening, it's the quantum of liquidity which was printed at the time of COVID prevented any sharp fall in the economy, in the markets, and we have not seen any economic crisis. So if you study the previous rate hike cycles, where along with the rate hike, if the liquidity was drained in form of QT, what is QT? For the central banks, they sell their bonds in the market, and the liquidity is basically getting sucked out of the market. So when Fed has shrunk their balance sheet by almost $1.3 trillion, the markets have not gone down. The Dow Jones has made new high. So these are the new correlations which have emerged because of the irresponsible printing done by the Western central banks. And this irrational exuberance makes me believe that at some point markets will start, the economies will start to face the heat, because even though the interest rates are not moving up, but the quantitative tightening is still going on. So what is going to happen, say US Fed balance sheet, in next 3 months, it will be shrinking from $7.7 trillion to almost $7.4 trillion. So another $300 billion are going to get out from the system. So on one side, the interest rates are at 5.5%. On the other side, the liquidity is drained out of the market. So at some point, all the major economies are going to weaken. And when they weaken, we will have plenty of opportunities, plenty of potentials. So the first impact of that will come on bullions. So when economy starts weakening, and because of that, the dollar index will start to weaken, and because of that, the expectation of the stronger rate cuts will start building. So we believe the gold and silver futures for the year 2024 are going to do extremely well. The reason for that is the demand side of the gold looks pretty strong. Central banks have been buying gold. Last year, they almost bought 850 to 900 tons of gold. A year before that, almost 1130 tons of gold. Central banks were net sellers of the gold, but the moment the US economy slows down, the investors will start buying gold ETFs. So gold ETF will witness sharp inflow during the second half of the year. So that is also very bullish for gold. So during the first quarter, whatever correction we see in first quarter, maybe to $2,000 or $1,980, that's the point where we recommend to go long. Our targets is $2,300 to $2,400 on COMEX. In India, it should test 67 to 68,000 rupees. And post budget and election, we expect Rupee to strengthen in that scenario. So if Rupee trades at 80, 50, 81, I think gold in India somewhere by the November or Diwali or Christmas this year, I think it should test say about 68,000, 69,000. Silver, right now the Chinese industrial demand is sluggish. The China's economy is having all sorts of problems. The manufacturing activity is down, their construction activity is going down. Government is giving small packages, not giving big flashy packages. So because of that, the demand side is slightly muted from China, but elsewhere in the world, from the renewables, solar, the silver demand is rising, and silver markets are in deficit from last 2 years. In the year 2022, the deficit was almost 220 million ounce. In the year 2023, the deficit is somewhere between 150 to 160 million ounce. So this sort of huge deficit makes me believe that after the first quarter, we are going to see a sharp bull run in silver, and silver futures are poised to test $28 on COMEX. And as far as MCX are concerned, $28 to $30 on COMEX, and MCX is concerned 85 to 88,000. So I'm expecting another conservative 10 to 15% jump in silver prices in the year 2024.